Okay, hello. Today we want to talk about FHA and getting your buyers approved FHA. There are basically three different things we want to be aware of in getting approved for an FHA: credit, income, and assets. Okay, number one, let's talk about credit. That's the biggest one. 640 is our preferred credit score. It can be done for 620, but there are a lot more overlays involved. But once we get up to a 640, the actual score, and that's your middle score, there's always three credit scores. Your middle score becomes your credit score, okay? But once we get the 640 credit score, we have to be aware of a couple other things. Credit history. We have to be at least 2 years from your bankruptcy discharge date. You have to be 3 years clear of any kind of foreclosure. Now, foreclosures, the completion date on the foreclosure, if the foreclosure was in a bankruptcy, it doesn't always coincide with the bankruptcy discharge, so you have to be aware that that date can vary from the end of a bankruptcy if it was involved in a bankruptcy. And even if somebody moved out of their house and they thought their house was foreclosed, a lot of times the best way to get this information is from public records, the sheriff's sale. When was the sheriff's deed recorded? That will give us a pretty good indication. But it's 3 years from that sheriff's sale date and then 2 years from the bankruptcy discharge date. So those are the important things to know about credit, and again, a 640. So if somebody comes to you and says, yeah, my credit's we're not really sure, you have to ask some questions. What is it in your credit past? Do you know your credit score? And a lot of times it's easy as, what kind of credit do you have right now? Do you have any good active credit? So if somebody had some derogatory items from the past, they had collections that maybe they paid them off, maybe they had a bankruptcy and that discharged a few years ago, but if they have not reestablished credit, chances are that score is going to be, it's going to stay where it was. The important thing for people to do, even when you have some bad credit, they don't want to get more credit, but that's the most important thing in getting the score back up, reestablishing and maintaining good payments. Also on the credit front, you can't have any late payments of any kind within the last year. So you want to see that 640, you want to be 2 years bankruptcy, 3 years foreclosure. You can't have any late payments in the last year. There are exceptions, but if they can say yes to all three of those things, then you're on your way. Okay, so the next part is your income. The income, of course, has to support the purchase. And when you're looking at your income, it's going to be based on your gross. So determine what your gross monthly income is. And then there's two parts to the debt to income ratio. Your front end is where you're going to determine your new house payment. And again, FHA, there's a lot of different parts to that payment. So you've got your principal, you've got your interest, you've got your mortgage insurance, your FHA mortgage insurance, you've got your taxes, you've got your homeowner's insurance. So all five of those become your payment, and there are no escrow waivers on an FHA. Those are always going to be part of your FHA payment. So once you determine what your new house payment is going to be, and sometimes you have to estimate what the taxes may be, what are the homeowners, you get a quote very early on. So once you determine what that payment's going to be, as a percentage of your gross monthly income, that becomes your front end ratio. Now take all of your other monthly debt as you find it on your credit report, add it to the front end, your proposed housing payment, that as a percentage becomes your back end ratio. So now your allowable debt to income ratio has a lot to do with also your credit score. So if you get it up over 640 and you're good to go FHA and all the things we talked about credit, you're going to be allowed to go up to about 45% on your back end ratio. So you're going to be thinking 35% front end, 45% back end. When and if you're able to get your buyer's score up over 680, the front end becomes irrelevant, and now you can go up to 55% on the back end. So that's where you want to be. 680 and your life becomes a lot more easier in qualifying for an FHA loan. So that's always our goal, is to see people that are up over 680. Okay, and then the last part are your assets. And this can be a little bit more tricky than you would think. Assets, show me the money. Where's the money coming from? Where is the money? So the guideline reads that you want to see 60 days of seasoned funds. So that means that this money has been in your checking or savings for the last 60 days. You can show me two monthly statements and the money's there, or you've been moving towards that money, or you'll have it by the time you close. If you're close, you can start the loan, but if you're a couple $100 short, you know that you're showing this savings pattern, and then your next statement will have it, you'll be fine. But the biggest thing with the assets, the underwriters want to see the only deposits that we want to see going in there are your payroll deposits. That makes it easier, okay? Any other kind of large deposit, and you are going to have to source it. So that means you're going to have to show a paper trail. You can't have money just show up. They don't care what you spend your money on, but if you need $5,000 to close on this loan, and all of a sudden a $1,000 cash deposit shows up, where did it come from? You have to source it. Okay, and you're perfectly fine to get a gift. You can get a gift from a relative. You have to document it. You have to source it. The gifter, again, has to be a relative. You have to show that relationship. You have to do a gift letter. You have to show a copy of the check. You have to show the check going into your account. Perfectly acceptable. Okay, but anything else, any other kind of large deposit, if you can't source it, you can't use it. Okay, very skeptical as to where your money comes from. So that being said, also one more thing about an FHA I want to bring up at this point. 3.5% on the down payment is all you need, and you can get up to 6% back in concessions from the seller. So under the current guidelines, if you were to buy a $100,000 home, technically you could get into that home for as little as $3,500. But that has to be your money, your buyer's money. They have to be able to show that is their money. Okay? So if everything else added up to $6,000 or less, the taxes for the year, their homeowners for the year, all of the other closing costs, everything, if it's $6,000 and the seller agrees to concessions, there you go. Your buyer is writing a check for $3,500 less the EMD, whatever they've given you already. And that's all you would need to close. So that is one of the major advantages. You can get a gift, and you can get up to 6% concessions, and only a 640 credit score. Now, I mentioned very early on that it is possible to get it done at 620. However, you cannot have any other, or you can't have any previous bankruptcies or foreclosures. If someone's just had a hard time getting their credit score up, and they've never had a bankruptcy or foreclosure, then they're fine to go with 620. Now, one of the other things about credit is, if they don't have any kind of credit at all, and you want to establish, we can always guide them to the easiest place to get a credit card. They're going to need to get a secured credit card, and those are not free. But we find that's one of the easiest ways to increase somebody's score, and this is somebody that hasn't had a whole lot of collections or judgments in the past. Get a new credit card, get a new trade line. That's the easiest way to boost it up. So Karen and I are always going to be in the office. One of us will always be here. Again, my name is Mike Estrada, and we are with National Home Lending. We're right next door, and we're here to answer any questions. So I hope this was helpful. What you think?